This is Nightly Business Report with Bill Griffith and Sue Herrera.
The case for raising rates has weakened somewhat.
Hikes on hold. That's how some are interpreting the Federal Reserve's pledge to be patient when it comes to raising interest rates. And the Dow reclaims 25,000.
Blowout quarter. Boeing reports strong results and books $100 billion in annual sales for the first time in its 102-year history.
House hunters hibernate. A new measure of sales falls to a 5-year low, sending a shiver through the real estate market. Those stories and more tonight on Nightly Business Report for this Wednesday, January 30th.
And we do bid you a good evening, everybody, and welcome. Yes, the Fed pledged patience. Earnings were solid, and those two things combined were a recipe for a rally on Wall Street today. It started with Apple's results that we told you about last night. Then came a strong report this morning from Boeing, which was followed then by the Fed, which suddenly seems to be speaking Wall Street's language. And when all was said and done, the Dow was up a strong 434 points today, back above 25,000. The Nasdaq added 154, and the S&P was up 41. Bob Pisani has more on this big day on the market from the New York Stock Exchange.
Stocks roared higher today on a handful of positive news and earnings beats. The Dow jumped more than 500 points at session highs to cross back over 25,000, with Apple and Boeing alone adding more than 200 points today. Now, the Federal Reserve wrapped up its first meeting of the year, and the language used in today's Fed statement showed a change in tone, saying the Fed remains patient when it comes to rate hikes and that balance sheet policy is entirely flexible. Those are the two things the market wanted to hear. And while bond yields sunk on the heels of those comments, overall, traders were happy. Now, never mind that the Fed did not change its economic outlook. The change in tone alone was good for more than 20 points in the S&P 500. That happened right after their announcement was made. Now, this is the good news. Here's the bad news. The market is looking very pricey right now. The S&P 500 has punched through its recent trading range. It's now trading at its highest level since December 6th. It's pricing in an awful lot of good news. Not just a patient and dovish Fed, but optimism over trade talks and the continuation of what I call slowing but still positive earnings growth. Here's the bottom line. In an environment with a lot of positives priced in and very limited earnings growth, the higher the market goes, the tougher it's going to be really bullish. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
The statement by the Fed, which dropped its long-standing reference to future rate hikes, was embraced by investors and seemed to alleviate a lot of anxiety. Steve Leisman reports tonight from the central bank in Washington.
The Federal Reserve, in a sweeping policy change from its December rate hike, gave the Doves almost everything they were looking for at the conclusion of their January meeting. The Fed, in its policy statement, kept rates unchanged, said it would be, quote, patient in considering further hikes, and removed from its statement language that telegraphed further rate increases ahead. The Fed even said its plans to reduce its $4 trillion balance sheet, described just last month as on autopilot, were up for consideration now if the economy weakens.
Growth has slowed in some major foreign economies, particularly China and Europe. There is elevated uncertainty around several unresolved government policy issues, including Brexit, ongoing trade negotiations, and the effects from the partial government shutdown in the United States. Financial conditions tightened considerably late in 2018 and remain less supportive of growth than they were earlier in 2018. And while most of the incoming domestic economic data have been solid, some surveys of business and consumer sentiment have moved lower, giving reason for caution.
Analysts took the new policy pronouncements to mean the Fed is now on hold for at least 6 months, pending more clarity in the economic outlook. Economist Joe Brasuelis at RSM called it, quote, a strategic retreat for the Fed. Ian Shepperson at Pantheon said it was, quote, about as dovish a statement as possible, unless it was a rate cut, which it wasn't. Powell said the Fed could take its time in figuring out its next move because inflation is muted and lower oil prices should keep it that way. What's unclear is if the fears of weaker growth that grip markets prove transitory, will the Fed double back again to talk about rate hikes later this year? Or is the Fed now paused for more permanent patience? For Nightly Business Report, I'm Steve Leisman in Washington.
Now to all those earnings, starting with Boeing, which helped lead the Dow higher. The aerospace giant posted record reported earnings for the fourth quarter and said it expects more of the same this year. And shareholders certainly enjoyed the flight today as the stock rose more than 6%. Phil LeBeau has more on Boeing's big earnings beat.
Pardon the pun, Boeing is soaring right now, delivering record earnings, revenue, and cash flow in the fourth quarter. Boeing CEO says it's proof the company is performing at a higher level.
I think what you see reflected here is a strong growth in the aerospace industry and the marketplace, and then the way we're leveraging that growth as we ramp up commercial airplane production. We're driving bottom line profitability and cash flow while we're doing that.
Boeing's earnings are surging thanks in large part to the company's most popular plane, the 737, where monthly production has steadily climbed higher, pushing commercial airplane deliveries to a record high.
The deliveries are in place, it's about execution, and the free cash flow is there. So, we view any pullback as an opportunity on the stock.
Supporting Boeing's lofty outlook, the fact more people around the world are flying somewhere. In recent years, roughly 4 billion people have taken to the skies. So airlines around the world are ordering more planes.
And the world needs 43,000 new airplanes over the next 20 years. About 7,700 of those are in China. So China needs the airplanes. They need the lift to continue to grow economically and to fuel their broader economic growth across multiple sectors.
Right now, Boeing has enough orders to cover the next 7 years of production. 5,900 planes worth nearly $500 billion. A backlog that should reassure investors who wonder if Boeing can continue to fly high. Phil LeBeau, Nightly Business Report, Chicago.
Fellow Dow component McDonald's reported strong global sales, but it struggled to attract more U.S. diners, and that is a critical market for the fast food chain. McDonald's raised menu prices, but that did not resonate with customers, especially when it comes to breakfast. The company says the chain has been losing breakfast traffic at a greater rate than it would like. That sent the stock slightly lower in trading today.
And the parade of big cap earnings continued late today with results from Microsoft, which said that sales from its cloud computing business rose, and that offset a slowdown in demand in other units. These are the numbers from the world's largest software company. They earned $1.10 a share, 1 cent better than expectations, but revenue was a little short of estimates at about $32 billion, and the stock fell in initial after-hours trading. Josh Lipton has the one key takeaway on Microsoft's quarter.
$9 billion. That was a big number in Microsoft's latest results, referring to the company's commercial cloud revenue in the quarter, up 48% year over year. Evercore's Kirk Materne, a Microsoft bull, says that's important because that's really the growth driver for Microsoft long term. It's all about the commercial business, and that's firing on all cylinders, he says. Though Materne also says there may have been some disappointment in other areas, notably Windows OEM revenue declined 5%. That's what device makers pay Microsoft to license the Windows operating system. For Nightly Business Report, I'm Josh Lipton, San Francisco.
And Visa reported a double-digit rise in quarterly profit. The payments network processed more transactions thanks to strong consumer spending and a robust economy. Both earnings and revenue came in better than expected. Visa also reaffirmed its guidance for the full year, and the stock moved higher and then fell in initial after-hours trading.
Jack Ablin joins us once again. We're going to talk about the market day, the earnings, the Fed. He's Chief Investment Strategy Officer at Crescent Wealth Advisors. What a day, Jack. Welcome. Thanks for joining us.
My pleasure.
Let's start with the earnings. I mean, clearly Wall Street liked these corporate earnings that beat expectations, but let's be clear, a lot of those expectations had been sharply reduced ahead of time, hadn't they?
Yeah, especially Apple. You know, remember Tim Cook came out in December with some very disappointing outlook news, talking down profits, talking down revenues. So when the news finally hit, it was actually not as bad as investors had thought. The company did come back with plans to improve their service business, expand some other revenue sources, and I think certainly investors took a liking to that.
So what do these earnings tell you, Jack, overall about the economy and the health of it?
Sure. So, we're tracking roughly between 11.5% and 12% earnings growth, which sounds great in isolation. That's down over the last several weeks as analysts have brought their forecasts down. But I think we have to look later into 2019 and know that earnings growth is expected to rise roughly low single digits in Q2, Q3, likely Q4, because we've got, massive comparisons. Remember, Q2 of 2018, we were up 26% year over year. So those are tough numbers to beat. Now, keep in mind that slower growth does not necessarily mean contraction. And I think that's what investors are trying to reconcile now.
And that brings us to the Fed, which, as we said, was very dovish with its comments today. No rate increase, maybe for the next 6 months, maybe for the rest of the year. Is that a green light necessarily for Wall Street just to continue higher then?
Yeah, I mean, it's really, interesting conundrum between what interest rates should be given the economic environment and what the market can handle. And what it sounds like that accommodation is the new neutral. And as long as we don't see inflation, which we haven't, then perhaps the natural rate of interest is lower than it is now than it has been in history. So if I were to take a snapshot back 20 some odd years, 30 years, and say, where should the 10-year Treasury be? I'm looking at a rate of probably 4 to 4.5%. We're at 275, right. And anything pushing it higher is really making market participants upset. So we'll have to see. But I think as long as we have no inflation, rates can stay where they are, and everyone's happy.
All right. Jack Ablin with Crescent Wealth Advisors. Thanks again, Jack. We'll see you again.
Thank you, Bill.
It is time to take a look at some of today's upgrades and downgrades. Coverage of United Continental was initiated with a buy rating at Argus Research. The analyst cites improved operating efficiency and strong cost controls. The price target is $101. The stock rose 2% to $87.47. Allergan was downgraded to equal weight from overweight at Morgan Stanley. The analyst cites emerging Botox competition and less confidence in the company's pipeline. The price target is $156. The stock fell a fraction to $143.89.
Whirlpool was downgraded to underperform from sector perform at RBC Capital, with the analyst citing industry uncertainty and that stock's recent rally. Maybe it made it a little too expensive. Price target now is $111. The stock fell 3% today to $132.15. Juniper was downgraded to underperform from buy at Bank of America Merrill Lynch. The call follows the company's disappointing fourth quarter results and guidance, which pointed to weak demand and pricing trends. Price target $25, and that stock fell 7.5% today in this big rally day to $25.83.
Coming up, Facebook shares take off. We'll tell you why.
Now, the labor market started 2019 where it left off in 2018 on a strong note. Private payrolls have grown at a much faster pace than expected in January. According to ADP, employers added 213,000 jobs as businesses continue to aggressively expand their ranks where they can. Big companies added 66,000 of those jobs. Mid-sized firms added 84,000, while small businesses gained 63,000. And the government releases its own monthly employment report Friday morning.
Investors are watching closely those trade talks between the U.S. and China, which got underway today. The stakes are high since both sides have just over a month to reach an agreement or risk escalating the trade war. We have two reports tonight. Eunice Yoon is in Beijing, but we begin with Kayla Tausche in Washington.
For the third time in 2 months, teams from the U.S. and China are meeting to hash out a trade deal as higher tariffs loom on March 1st if sufficient progress is not made. The talks have lasted all day today and throughout Thursday afternoon, with President Trump sitting down with Vice Premier Liu He. The White House has laid out its case. It's open to China's offer to buy more natural gas and soybeans, but China must stop stealing U.S. intellectual property and technology and allow U.S. companies freer access to its markets. White House economic official Larry Kudlow says the talks themselves are positive.
We've never had anything this comprehensive, and I regard that as a big plus. How these things are worked out, we'll have to wait and see. The president has expressed some, I would say, guarded optimism about the talks.
Treasury Secretary Steven Mnuchin has been trying to manage expectations.
Now, let me just remind people, we do have another 30 days after this, so my expectation is that we'll make significant progress at these meetings, but I would just emphasize these are complicated issues. We have a timeline of how we've mapped out the 90 days.
Overshadowing the meetings are criminal charges the U.S. filed on Monday against China's Huawei and a push to extradite its CFO. The Commerce and Justice Departments have said that situation is separate from trade, but the president has said he's willing to intervene in the Huawei case if it means a better trade deal. For Nightly Business Report, I'm Kayla Tausche in Washington.
Now to Eunice Yoon in Beijing for a look at how China is approaching the talks.
U.S. and Chinese negotiators are hoping to reach an agreement to avoid greater tariffs by the March deadline. The Chinese, led by Vice Premier Liu He, will reportedly offer a major increase in purchases of U.S. agriculture and energy products, a crackdown on IP theft, and will likely play up a new draft foreign investment law. The new law, which is expected to be passed in March, is meant to address U.S. concerns about unfair trade practices by, for example, banning forced technology transfers. However, the wording is vague enough that most foreign executives are skeptical this is more than a cosmetic move. In fact, many expect the Chinese negotiators to push back hard against U.S. demands for deeper fundamental changes to the way the economy runs here. The Chinese will also likely be less than enthusiastic about the U.S.'s proposal for an enforcement mechanism that would allow the U.S. to ensure that Beijing is accountable. The talks will also be overshadowed by the Justice Department's indictments against Chinese tech titan Huawei. U.S. Treasury Secretary Steven Mnuchin attempted to separate the talks from the indictments, though the Chinese see the targeting of Huawei as political. The CFO's extradition hearing has been postponed to March 6th. Vice Premier Liu He is set to meet with President Trump on Thursday. That's an important meeting where the Vice Premier will be able to directly send a message from President Xi to President Trump and could potentially influence the outcome of any deal on trade or Huawei. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Customer growth slows at AT&T, and that's where we begin tonight's market focus. The company added far fewer wireless subscribers than expected as it tries to keep pace with Verizon and T-Mobile. It also lost more pay TV customers in the fourth quarter. AT&T has pulled back on promotional pricing for phone and television plans as it focuses on paying down debt following its $85 billion purchase of Time Warner. The shares fell 4% to $29.37. Anthem is speeding up the launch of its pharmacy benefits management business. The company said that move will allow Anthem to accelerate its whole person health strategy, which it believes will reduce the total cost of care. Anthem easily beat fourth quarter earnings estimates and said profit for 2019 will be stronger than expected. The shares rose 9% to $297.56 and touched a 52-week high. Royal Caribbean reported a rise in profit in the fourth quarter and issued upbeat guidance. The company cites strong consumer demand, even in China, as that economy slows.
Even though the economy may not be doing as well as people hoped, the middle class continues to grow. And one hypothesis is that it's just growing faster than the economy slowdown. And so that, of course, helps our business.
Royal Caribbean was up 8% today to $120.98.
Oshkosh reported first quarter earnings that topped expectations, and it raised its sales guidance for the year as well. The defense contractor said that its bottom line was helped by higher sales in its fire and emergency unit. Oshkosh shares closed 2.5% higher today to $72.78. General Dynamics is forecasting disappointing profit for the year and said that it does not expect margins on its business jets to improve until 2020. That overshadowed a strong performance in the Information Technology Services unit and earnings that topped analyst forecasts. General Dynamics fell 3% today to 170.91. And Avon is cutting 10% of its global workforce. The direct seller of beauty products says that the layoffs are all part of a strategy to streamline its business and reduce product line complexity. Shares of Avon, which is now a small cap stock, were volatile in the after hours session, down 2 cents to the regular day at $1.89. And it was a mixed quarter for Tesla. The electric car maker posted stronger than expected sales, along with its second consecutive quarterly profit, but that profit did miss estimates. As a result, shares initially fell after hours, biting into a nearly 4% gain that we saw during the regular session, where it closed at 308.77.
Facebook out with strong fourth quarter numbers. The social media company posting earnings of $2.38 a share. That was nearly 20 cents above estimates. Revenue came in just under $17 billion for the quarter, and that too was ahead of estimates. And investors liked what they saw, sending shares initially higher in after-hours trading, adding to a better than 4% gain during the regular session. Julia Borston has more on Facebook's quarter from its headquarters in Menlo Park, California.
Facebook is earning a lot more revenue from its users, the company delivering much stronger top and bottom line results than expected. The company's earnings per share soaring 65% and revenue gaining 30% from the year-ago quarter. This despite the fact that Facebook's monthly and daily active user numbers just inched up, coming in right in line with expectations. But both with consumers and advertisers, the company seems to have shaken off concerns about a slew of negative headlines about data privacy and manipulation on the platform. Mark Zuckerberg saying, quote, "We fundamentally changed how we run our company to focus on the biggest social issues, and we're investing more to build new and inspiring ways for people to connect." Facebook has increased its headcount by 42% in the last year, in part to improve security. For Nightly Business Report, I'm Julia Borston in Menlo Park, California.
And coming up, the big chill in the housing market.
Here's a look at what to watch tomorrow. A handful of key companies are out with earnings, including Amazon, General Electric, and UPS. As we reported, the second day of trade talks between the U.S. and China will be taking place, and a judge has scheduled a bankruptcy hearing for PG&E, California's largest utility. That's what to watch for on Thursday.
Meantime, Foxconn is now reconsidering its plan to make a type of TV display at a plant in Wisconsin. You may recall that the company's $10 billion campus was supposed to be a manufacturing center that created 13,000 jobs, but the new plan now calls for it to be a research hub. Foxconn does say it remains committed to that facility and its long-term investment in Wisconsin. Foxconn, as you probably know, is a major supplier to Apple and is the world's largest contract maker of electronics.
The U.S. Postal Service is making the rare decision to suspend mail delivery in parts of the country. Regions within 10 states are affected because of the extreme cold that's bringing record low temperatures to the Midwest. The Postal Service says the decision was made for the safety of its employees.
And that winter chill may be settling over the housing market. After a very slow fall, most analysts were expecting to see a little bump in December sales. But as Diana Olick reports, that's not what happened.
There was good news for home buyers out shopping in December, a big drop in mortgage rates. But that did not help sales at all. Signed contracts to buy existing homes dropped nearly 10% compared with a year ago, marking 12 straight months of annual declines, according to the National Association of Realtors. It was also the lowest December sales reading since 2013. This, even as the average rate on the 30-year fixed fell from just over 5% in mid-November to 4.61% by the end of December.
I think consumers were impacted by all the discussion of shutdowns, of the volatility in markets, whether it was interest rates, which were actually falling at that time. Partly it's a recognition thing that the realtors or the builders or whoever is talking to the consumers about buying a house probably takes them a little time to get consumers to recognize that there's an opportunity.
Realtors blamed the big drop in the stock market, hitting consumer confidence. But affordability continues to be a problem. The median price of a home sold in December hit the highest level ever. Even though the gains in prices are slowing, it's mostly happening on the higher end, not at the entry level, where demand from younger buyers is strongest. And even slightly lower interest rates are apparently not impressing millennials.
Recent millennial buyers have been very conservative. The percentage of them spending more than 30% of their disposable income on buying a house is very low compared to, say, 10 years ago.
If mortgage rates do stay this low for a while, it could help bring more buyers back to the market this spring. But for now, anyway, it looks like a long, cold winter ahead for housing. For Nightly Business Report, I'm Diana Olick in Washington.
Before we go, let's take a final look at the day on Wall Street. The Dow gained 434 points to close back above 25,000. The Nasdaq added 154, and the S&P 500 was up 41. That does it for us tonight on Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. Rest up. It's a busy day tomorrow.
And stay warm.
Yes. See you tomorrow.